All right, welcome everyone. My name is Rachel Feinstein. I'm HPBA Senior Manager of Government Affairs, and I'll be your guide today on the new wooden pellet heater tax credit. So to start things off, today we'll be covering the history and background of the biomass heater tax credit, the process that HPBA has been using over the years to guide our policy and advocacy activities, details of the new tax credit, some frequently asked questions and answers to those questions, and then at the end of the webinar, we will have a live Q&A session with attendees joining us today. So please submit any questions that you have through the Q&A on Zoom. We'll answer as many as we can at the end of the webinar. All attendees are muted. And again, to submit a question, submit it through the Q&A, not the chat. So we'll be monitoring the Q&A closely for questions at the end. Feel free to enter them as we move along through the presentation. If any of the questions asked are answered during the FAQ or other parts of the webinar, we'll likely not address those if they've already been answered in the webinar prior. A recording of this webinar will be available on the HPBA website within 24 hours, and we will send a copy of the recording and the slides and any questions answered along with the recording to all HPBA members. So with that, we're going to get started. Just wanted to have a disclaimer out there, which will be at the bottom of each slide during this presentation. The Hearth, Patio, and Barbecue Association and its affiliates do not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only, and it is not intended to provide and should not be relied on as tax, legal, or accounting advice. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. So we're here to answer any questions you might have, but understand that we're not tax professionals. We're using the IRS guidance that they've issued in the past to answer a lot of these questions, but each situation and individual can be different. So be sure to counsel your own accounting person or software or tax advisor. So with that, here's my email address. I've been with HPBA for coming up on 10 years actually this May, and been working on the tax credit issue for maybe 6 or 7 years. So we'll go ahead and get started with a little history of the biomass heater tax credit. So this tax credit was first enacted in 2008, 2009, under Section 25C of the tax code, and it was enacted by the American Recovery and Reinvestment Act, also known as the stimulus bill. The language said a biomass heater must be 75% efficient. It did not specify how efficiency was to be measured. And at the time, there was no public list or database of biomass heaters, of efficiency ratings. That didn't come about really an easily accessible database until 2015 with the new NSPS. In 2009, the BTU Act was first introduced, and the language in the BTU Act from the beginning read that a product must have a thermal efficiency of at least 75% per the higher heating value HHV of the fuel. And this bill was really primarily supported by the biomass boiler industry, especially in the northeastern part of the United States. And the Biomass Thermal Energy Council, BTEC, was a major proponent of that bill. In 2015, there was another set of language included in a large energy bill that specified higher heating value weighted average. And this was primarily supported by the American Council for an Energy Efficient Economy, ACEEE, which is a major energy efficiency advocate in Washington, D.C. And that language read 75% efficient per the higher heating value of the fuel per CSA B415, which is the efficiency standard for biomass heaters. Now, the biomass stove tax credit under Section 25C has been extended multiple times over the years since 2009. This is just a history of tax credit language for biomass heaters over the years in varying forms that have not been enacted. The only language that has been enacted until December was that first 2008-2009 language. So then in 2018, another major energy efficiency advocate in town, the Alliance to Save Energy, ASE, reached out to HPBA about tightening the Section 25C tax credit. The 25C tax credit over the years, it started out very generous with a $1,500 tax credit. And then in the last probably 5 years or so, the credit has been $300. So ASE was looking to expand some of these tax credits and tighten them up, not just ours, but many, many other energy efficiency tax credits for products like windows and doors, furnaces, solar panels, etc. So after, I think, over a year and a half of negotiation with ASE and other groups like NRDC and Sierra Club, we agreed on language that specified that a qualifying biomass heater for the tax credit must have a 73% efficient per higher heating value for products purchased before December 31st, 2020, and 75% per the higher heating value for products purchased after December 31st, 2020. Products must be on EPA's lists of certified wood heaters. And this was supported by HPBA's solid fuel hearth appliance section. We liked that the credit would gradually move to 75, going from 73% weighted average HHV to 75% weighted average HHV. It gave the industry time to look ahead to what was coming. Then the BTU Act language, that was included in a large infrastructure bill, HR2, in June of last year. And again, that language read, must have a thermal efficiency of at least 75% per the higher heating value of the fuel. And that language is what was plucked up by the House Ways and Means Committee staff and put in a year-end spending bill, which was enacted on December 27th. And there was language in that year-end spending bill that actually eliminated the Section 25C tax credit for biomass heaters to eliminate what House Ways and Means Committee staff eliminate a double benefit. It was definitely a surprise to many of us in the biomass policy space that the BTU Act language was included and that provision to eliminate the 25C tax credit was included in the language. Then just wanted to go over, how does our process work? We've gotten questions from members who maybe aren't involved in our sections or government affairs committee, and how we operate and how we come to policy decisions on what we support, what we don't support, what we're active in, and what we're not. So HPBA's Solid Fuel Hearth Appliance section, SFHAS, has been discussing updating the biomass stove tax credit since about 2016. The Solid Fuel Hearth Appliance section is comprised of HPBA manufacturing members who make wood and/or pellet burning appliances. So that's wood and pellet stoves, inserts, fireplaces, accessories as well. When HPBA was negotiating with the Alliance to Save Energy from May 2018 to January 2019 to phase in that 75% HHV weighted average, we updated the section on that process as we moved along through discussions at Solid Fuel Hearth Appliance section meetings. And section members had repeatedly said that tightening the credit could be supported if it resulted in a higher incentive amount and longer duration of the tax credit. Recently, in January and February of this year, we had a couple phone calls with our Solid Fuel Hearth Appliance section members to discuss the latest developments with the BTU Act language being enacted and whether or not to actively pursue a position on what products qualify, on advocating with the IRS on how the credit, what efficiency number, how that should be calculated. And the section was not able to come to a clear consensus on which position to take. So at this time, HPBA is not actively advocating for one position over another. We are waiting to see what guidance the IRS issues, which will provide more clarity when that is published, most likely later this year. So details of the new tax credit. What qualifies, what does it require? So the language says that a product must have a thermal efficiency of at least 75% per the higher heating value of the fuel. This includes, the way they define what a biomass heater is, it includes anything that heats the air, heats water, using biomass fuel. So that's wood, pellet, even potentially corn, but for all intents and purposes, for our industry, wood and pellet fueled products. IRS clarification, as I said, will likely be issued later this year, and any interpretation issued by the IRS would be retroactive to January 1st, 2021. The incentive amount, so it's a non-refundable tax credit, which means you reduce your taxes owed up to zero. You can carry over the credit amount if you get to $0 owed and still have a credit remaining. So for example, if you say you owe $1,500 in taxes and say your tax credit that you get is $2,000, you reduce your taxes owed to zero, so 2,000 minus 1,500, but you still have that 500 left over to claim. What do? That can be carried over to the next tax year to reduce your tax liability in the following year as well. This is something new with the Section 25C tax credit, which our industry has been very familiar with over the years. You could not carry over a credit amount. So in 2021 to 2022, the tax credit covers 26% of purchase and installation costs, and I'll get into what installation costs are in a moment. And then in 2023, the tax credit covers 22% of purchase and installation costs. There is no lifetime limit or cap to how much you can claim within that percentage. Under Section 25C, you might remember that there was, I believe, a $500 lifetime limit. So if you claimed $300 for a biomass stove one year, and then say a few years later you bought another qualifying stove, or you got some windows that qualified for a tax credit, you could only claim up to $200 until you met that $500 lifetime limit, and then you couldn't claim that credit anymore ever. Now under Section 25D, there is no limit. If anyone claimed the 25C credit in years past, that is no implications for claiming it for the future. This is a completely new tax credit under a different part of the tax code. So what costs are covered? The purchase costs, including any sales tax, on-site labor costs and labor costs for installing the product that would qualify for the tax credit, any venting for that product, electrical work, hearth pad, essentially those items needed to complete the physical installation of the product. And also the tax credit must be claimed in the year in which product installation was complete. So if someone bought a product in November 2020, but it couldn't be installed until February 2021, if the product still qualifies for the new Section 25D tax credit, they would have to claim it in 2021. They could not claim the Section 25C tax credit because the product was installed in 2021, not 2020. So finding qualifying products. Ask your manufacturers if they have a certification statement declaring which products qualify. Many manufacturers have a section on their website about the tax credit and a link to a PDF or a page on their website that lists the products that they certify as qualifying for the tax credit. Now, you don't need a certification statement to claim the credit. Another source is you can look at the EPA certified heaters database. There are two databases that are linked to on one page, which I'll show you in a moment. The EPA Wood Heater and Central Heater databases. Wood Heater refers to the EPA terminology used, it is what it is, but wood heater refers to room heaters, like wooden pellet stoves and inserts. Both inserts and stoves, freestanding stoves, qualify for the tax credit, as do hydronic heaters and furnaces that meet the efficiency requirements. So familiarize with these databases if you haven't already. Be aware that all information it's not all of it is up to date. So always check with your manufacturers on which products that they certify as qualifying for the tax credit. So we created a shortcut link, so you don't have to type in a very long government link. If you type into your browser bit.ly lowercase /EPA, all caps, certified stoves, you will come to the, I don't know if you'll come, forget if you come right to this room heater page or if you land on the main home page of this database. But for wood stoves, for wooden pellet stoves and inserts, here's a screenshot. I believe it looks the same for the central heater database as well. You will look at the overall efficiency -HHV column, which I point to there. You can sort by efficiency, you can search by manufacturer if you change to advanced search to find products that may qualify for the tax credit. If a product is on this list, that doesn't necessarily mean that it qualifies for the tax credit. Some consumers have been confused. If I send this link to this list to them, they think any product on this list means it qualifies. They don't look at the efficiency column. So be sure that if you get questions about this from your customers, that if they look at this list, they keep that in mind, that overall efficiency, HHV, that column is what they should look at. So I'm going to go over some frequently asked questions that we've received, and more FAQs can be found on our tax credit website page. And there's the shortcut link, bit.ly/stove tax credit with the first letter of each of those words capitalized. And you can find more information there and additional resources. So what happened to the old Section 25C tax credit of $300? So it is still available for 2020 purchases and installations completed in 2020. Also, if someone made a qualifying purchase and install in 2019 or 2018, they can claim the credit using IRS Form 1040X, I believe, and file an amended return to claim it on a previous year. Manufacturers should still have up their manufacturer certification statement for the 2020 tax credit models that meet. If they don't have it up, if they've taken it down already, not realizing that people are filing their 2020 returns and still need that information, flag it with your rep or directly with your manufacturer contact to get that certification statement if they have it. And if they could put it back up on their website until tax filing season is complete, that would be very helpful. Again, the language enacted at the end of 2020 eliminated the 25C tax credit of $300. The credit would have expired anyway, December 31st, 2020, without language that would extend it, which has happened over the years. The new 25D credit is not retroactive. It can only be claimed on 2021 and beyond tax returns. And again, the credit can only be claimed on the tax return year in which product installation is complete. So can you claim both this federal tax credit and a state tax credit? And as you may notice, a lot of these questions are from the perspective of a consumer, since a lot of these are questions that you might get from a consumer, and this is how we would answer these questions. So yes, you can claim both a federal tax credit and a state tax credit for the same product if it qualifies. A taxpayer is not required to reduce the purchase price or cost of property acquired with a governmental energy/efficiency incentive that is not a rebate. Many states, and this language is directly from the IRS guidance on this part of the tax code. Many states label their energy efficiency incentives as rebates, but these incentives may not in fact constitute as rebates or purchase price adjustments for federal income tax purposes. So again, as I mentioned before, a lot of these situations can be very specific to certain individuals, certain circumstances. Always check, consumers should always check with a tax professional if there's an ambiguity in their situation. Related, if I buy a qualifying product under a state utility or other rebate changeout program, do I have to reduce the amount of the federal tax credit? And it really depends on each taxpayer's situation. If it's a rebate, rebates generally represent a reduction in the purchase price or cost of property, and the taxpayer must exclude the amount of the rebate from the amount of the qualified expenditure, the qualified cost, on which the taxpayer calculates the tax credit. In general, in order for a receipt of funds to be considered a non-taxable rebate, the rebate must be based on or related to the cost of the property. The rebate must be received from someone having a reasonable nexus to the sale of the property. For example, the manufacturer, distributor, or seller/installer. And the rebate must not represent payment or compensation for services. So again, if someone has a situation like this, strongly recommend that they consult with a tax professional or ask the changeout program or state utility rebate program administrator how they classify their rebate, like what is the nature of it. Can I claim the credit for a qualified heater installed in new, secondary, or vacation homes? Yes, you can. The 25C credit, you could not do this, but Section 25D, you can. The credit can be claimed for qualifying products installed in a new home that's being newly constructed, in a second home, in a vacation home. It just can't be what the IRS calls an investment property, a property that you rent out, like on Airbnb, or you rent it to someone, and it just can't be for in a home like that. Do highly efficient fireplaces qualify for the tax credit? It depends on the product. There's a lot of different marketing language out there that can be confusing just because the marketing language says a product is highly efficient doesn't necessarily mean that it meets that minimum efficiency requirement of 75% higher heating value. If this is a question for a product that you're looking at or a customer is looking at, is there a manufacturer certification statement saying the product qualifies? If there isn't, does it have an efficiency of at least 75% HHV on the EPA certified heaters list? If the answer to those two questions is no, it might not qualify for the tax credit. But again, check with the manufacturer. If they don't have a certification statement listed, it might not qualify. It might qualify. They just don't have the statement on the website where you think it would be. Basically, checking with the manufacturer or your rep is always a good de facto action to take when there's a question like this. Another one, I was told that no wood burning inserts qualify for the tax credit. Is that true? No, there are some wood burning inserts that do qualify. To our knowledge, there are at least 11 wood burning inserts that qualify for the tax credit and at least 5 pellet inserts that qualify. More might qualify based on manufacturer certification statements. So again, check with your manufacturers to see if they have an insert or inserts that qualify. There are a few companies out there that have more than one insert that qualifies. So always check that. Do masonry heaters qualify for the tax credit? It depends on the model and on future IRS guidance. Some masonry heaters might qualify for the tax credit. Speak with the manufacturer or a masonry heater dealer about which products may qualify. Future IRS guidance could impact whether masonry heaters qualify. A lot of questions that we get Some of them really depend on how the IRS interprets some of the questions that they are receiving. So of course, we'll be keeping an eye out for that later this year. Here's a scenario. A manufacturer rep told me that one of their models, which does not appear on the EPA list with an efficiency of 75% or higher, is eligible for the tax credit because one of the runs conducted during emissions testing got higher than 75%. Does it qualify? So if the manufacturer issues a certification statement saying it qualifies, then yes, that can be relied upon. But if the IRS issues guidance saying that a qualifying product must have an average overall efficiency of at least 75% HHV, then no, it likely would not qualify. So again, coming back to that pending IRS guidance, we'll see what how they interpret must have a thermal efficiency of at least 75% HHV, how they interpret that. Another question, if a customer needs to buy tools and an ash vacuum to keep up their new wood heater, which qualifies for the tax credit, can those accessories be included in the total cost for the tax credit? No, it cannot. Accessories like these, they're not required to complete installation. If everyone was able to expense the tools that they have to buy, the government would be out of a lot of money, most likely. So another question, the hearth in a customer's home needs to be extended for a new insert that qualifies for the tax credit. Is the cost to have the hearth extended covered by the tax credit? Yes, it is. This is a cost associated with the on-site preparation, assembly, or original installation of the qualified product, and for piping or wiring to interconnect the qualifying product to the home. Another question, a customer wants a wood stove that does not meet the 75% minimum efficiency. Can the tax credit still be applied to the venting and installation costs? No, it cannot. The tax credit can only be claimed for venting and installation costs for a product that qualifies for the tax credit. Related to this question, I had a call from a dealer who sold a stove that qualified for the tax credit to a consumer, and they also bought another stove that did not qualify for the credit, but they were on the same bill, being installed in the same house, but one qualified and one did not. The installation costs, on-site labor costs, only those associated with the stove that qualifies for the tax credit can be included in the total cost. In that case, it might be a good idea to have two separate bills to have it like very cleanly laid out. One for the product that qualifies and one for the one that doesn't. Just a thought, something that I might do, but it's really up to you how you separate the two and make sure that the labor costs and associated venting and materials for the product that does qualify is considered the total for that product that qualifies. Another question, a dealer has a used stove on their floor that is EPA certified for 2020 and is 77% efficient overall average efficiency. Would the tax credit apply to this used model, or do I need to purchase a new stove? So the tax credit would not apply for a used model like this. Section 25D treats an expenditure as made when the original installation of the qualifying property is completed. So this stove, it's already been installed and used somewhere in a residential setting. If it's a used floor model, it's a little gray. But I would say no. Only the taxpayer who begins the original use of the constructed or reconstructed structure. This is referring to new and existing homes, but I think this would apply to a used product too. Only the person who has begun the original use of the product could claim the tax credit for that product. Another question, a consumer has a hunting cabin that they only use a few weeks out of the year. They want to buy a stove that qualifies for the tax credit. Will they be able to claim the tax credit for a qualifying stove that will be installed in a home used only a few weeks out of the year? Yes, they can absolutely do that. Again, it's the credit can be claimed for products installed in a secondary home, even if it's only used a few weeks out of the year. If it isn't being rented or used as like an investment property where you rent it out when you're not using it, if you're not doing that and you're just using it a few weeks out of the year for your own personal use, that's totally fine. You can claim a tax credit for qualifying product that will be installed in a home like that. So while I go over this slide, everyone, I want you to think of some questions that you might have and type them into the Q&A, and we'll get to those live questions and answers in a moment. But one thing you can do now or after this presentation, be sure to visit our tax credit information page and look at we have a consumer one-pager up that is designed that you could print out and have in your store or in your truck and have that handy for consumers who have questions about the tax credit. Also, take a look at what products you have in your inventory and what qualifies for the tax credit. Know before your customers ask. You can even use this in your own marketing and know which products qualify so you can be that resource for the consumers, and make sure the information that you're giving to people is accurate. Check with the manufacturers, make sure that the products that you think qualify actually do qualify. Do the due diligence to have that information handy. So now we're gonna take a look at the questions that you've entered in the chat, in the Q&A, and let's see. Thanks, Chris, for posting the Consumer One Pager link. Perfect. I can take a look at the Q&A, Chris. I can take care of that. I have it up here. So the first question: will there be a limit on the amount the tax credit will cover, as in up to 10,000, etc.? Nope, there is no limit. Unlike Section 25C, which does have a limit, there is no limit to the 26% or 22% in 2023. Is there a limit on number of units claimed in one house? Nope, there is no limit. How many years can you carry over the tax credit? You can continue carrying it over until you've claimed all the money that you're owed on that credit. So you can roll it over to 2022, 23, until you have claimed all of the credit amount. We've noticed that many wood stoves are not listed on the EPA database website. Why is this? Is there another website we can utilize? Why are they not? If they're not on the EPA database website, they might be out of production, or they're no longer certified to EPA Step 2. Maybe they're Step 1 stoves and they're not Step 2 certified, and that's why they're not on the database. You can only, in the US, the only covered products that you can sell, this is separate from the tax credit. The tax credit's voluntary. Only new Step 2 products can be sold and manufactured in the US. That does not cover used products, but that's a whole other issue separate from the tax credit. But check with your manufacturer on that as well. Maybe some of the way that the stoves are named on the EPA database are different from their name that's used to market them. So check with your manufacturer on the specific models that you're looking at, because they might be on the list, but they're just more difficult to find. Another question: will additional work required to bring the ventilation system up to code? For example, installing a wood burning insert in a masonry fireplace in which the flue has glazed creosote. Will this work be coverable by the tax credit? Yes, that would be considered on-site labor associated with completing a proper installation of a qualified product. So yes, that work to bring the ventilation system up to code would be required, would be included. Can you include the optional blower on a wood stove as part of the total invoice? I would think so, since that's considered venting or an electrical component to properly use the stove or make it heat a room more effectively. I think that could be included. Check with your tax advisor on whether that would be considered an allowable expense. I would double check on that, but I'm gonna say maybe an answer to that. If it's optional and you don't need it, it's not a requirement for the stove to work properly, check with your tax counsel on that. Another question, will the cost of the appliance and installation need to be itemized in order to fill out the form? It doesn't hurt to itemize it on your invoice. I would think that your invoice or your final order of like costs and things to complete installation would be itemized. The IRS form 5695, which is also used to claim the Section 25C tax credit, for 25D, use the same form. It's not an itemized declaration. You're only entering the total, the 26% in that. It doesn't need to be itemized to fill out the form. Okay, we have a customer installing 2 stoves that qualify for the tax credit. He wants to install an all masonry chimney with a flex liner instead of using hard pipe. Can he claim the tax credit on the cost of the masonry chimney? Yes, he can. That would be considered part of the venting and connecting the appliance permanently to the home. So yes, he could. If I have a federal, next question, if I have a federal tax return of $1,000 and I spend $5,000 on my new qualified wood stove, do I get a return of $6,000? So this is it's called a non-refundable tax credit. It reduces your tax owed to 0. So if you don't owe any money to the government, like say you're getting money back and you don't owe any federal tax, you're already at 0 and you're getting money back, this would not add additional money to your tax return. It would reduce your tax liability. So you could carry over the credit amount to the following year if you're already at 0. Just make sure you fill that out on that the customer fills that out on their tax form so they can carry it over to the following year. Let's see, if you buy a wood stove as a gift for someone who lives in a different house, who gets to claim the credit? The stove gifter or the new stove owner? I'm gonna have to get back to you on that question, and I'll look into that. And in the follow-up after this webinar, we'll have the recording and any unanswered questions answered. So I will look up this question and see if I can get an answer for you from the existing guidance. It's tricky because the IRS code deals more with, I would think that the gifter, the person who spent the money, would get the credit, but if it's not going into property that you own, that's a tricky one. I'll look into that. So TBD. Would this credit cover any cost on demo or removal of old unit to upgrade to the new unit? I don't think it would. I think it would only cover the on-site labor cost of installing the new one. But let me look into that question too, because I'm uncertain of how that would be addressed. So I will look up that question as well. All right, I think we're at the end of the questions we've gotten in. If anyone has any more, I'll give it another minute or two for people to enter anything in the chat here. No. Yeah, I'll give it another minute for any additional questions here. Another 15 seconds and then we'll start to, another question here. If the tax credit is carried over to the following year, 2022, for example, and you continued to pay in through payroll taxes through 2022, would you then get a larger return for what you paid in? So this, again, this is not adding money to what your tax return is. It's reducing your tax burden, what you owe in taxes. So if you're getting a return, that means you don't owe anything additional in taxes. Check with your tax professional on that one. It's a non-refundable tax credit. It reduces your tax liability. It does not add money to the money you're getting back in your return. What kind of documentation do customers need from the installation company? Great question. So customers will need the receipt from you, preferably an itemized receipt for their own tax records and for them to keep for themselves. They'll also need, if available, the manufacturer certification statement, which declares that the product that they bought qualifies for the tax credit. If there isn't a manufacturer certification statement, but it does qualify because its average overall efficiency is 75% HHB or higher, then pull up for them or point out to them where in the operation manual or owner's manual where they can find that average overall efficiency information. This is for cases where there is not a manufacturer certification statement. Let's see. Do you mind expounding on how the credit has been received / worked with when you were working with the other environmental groups? Is it well received, or is it an issue in the future for us as a wood burning industry? It's definitely been a hit or miss kind of conversation. One of the biggest, not barriers, but hurdles to get over with some people is they don't really understand how a wood stove or a pellet stove works and how it's a renewable fuel source, or they've never seen a wood stove or heard of a wood stove before. You'd be surprised how many people have never heard of a wood stove before. Some people are very open to the idea and are interested and support it. And then there's other groups, especially in the Northeast and parts of Canada, who are very adamantly opposed to wood burning. They don't like it. They will never like it. And they just will not support it as a fuel source. The groups that we've worked with for the most part, including NRDC and the Alliance to Save Energy, they've been supportive of it, but only if there are guardrails, so to speak, like really pushing the efficiency requirements, emissions. They're very conscious of that. Some of them might not have complete information and are interpreting wood burning through a certain lens. So there's always that you have to work with when talking with other groups about wood burning and the wood heat industry and pellet heat and the pellet part of the industry as well. Great question. Any idea on whether other tax credits that can't be carried over be calculated first? So I got a call, just as an example, I had a call from a consumer who had just bought a new electric vehicle, which qualifies for a federal tax credit. I think it's something like $7,500, either for electric vehicle or solar panels. And they also were looking into buying a new wood stove that would qualify for the tax credit. And check with the tax council on this. When I talked to this person, I suggested that they claim maybe, so this person's tax burden was, say, $8,000 as an example. And so $7,500 tax credit for the car. And then the wood stove that they wanted to buy, the 26% amount, as an example, we'll say is $1,000. So you've got $8,500 total tax credit, but you only owe $8,000 in taxes. Yeah, so you would carry over the $500 from the wood stove into the next year, because that can be carried over. If you have to claim $1 for the tax credit, the stove tax credit, and then carry over the $999 over, again, consult with a tax professional on that, how that's calculated. I don't think there's any particular order in which you claim a tax credit, like the mathematical calculation. Would any repairs to the chimney crown associated with making sure the chimney liner top plate is properly sealed qualify for the credit? Yes, I think that would qualify. That's considered part of the on-site labor to finish the appropriate installation of the product, and the venting and anything else needed to complete installation that makes sure the product operates properly. I think that would qualify. All right, any other questions? We have 10 minutes left. So any other questions or anything you're still confused about, or anything I've covered here but didn't quite address what you were thinking of?
Rachel, this is Ryan. With regard to that question about how is the tax credit received within the environmental advocacy world, is it maybe worth a mention of how this could have a longer lifespan than 25C had?
Yeah, definitely. So with a more beefed up credit, so to speak, the credit has definitely become more viable for the energy efficiency advocates. And there actually has been legislation that would extend the credit, the 25D credit, for an additional 5 years, so through 2028. And part of this will also be how much money is spent on the credit. So the Congressional Budget Office estimates for each credit, each piece of legislation, how much it will cost the taxpayers. So they've estimated that this provision would cost, I think it was maybe $100 million over 5 years. And if a lot of people are claiming the credit when they shouldn't, and the cost of the credit is, when it comes down, when the IRS evaluates the data, 200 million, like double, then that might put this credit in jeopardy and reduce the credit amount or eliminate it entirely. But having this very strong, very serious tax credit now for biomass heaters, it opens doors for us in other parts of the biomass advocacy world, such as with change-out programs. We've been working on legislation, has not yet been reintroduced, but the bill would establish a new federal change-out program fund to replace older wood heaters with new EPA certified products. So supporting this tax credit and being involved in discussions over the years has really elevated HPBA's and the industry's profile in the energy efficiency advocate world. How many years can you carry over the extra credit is another question on your tax return. I think until you have no credit left to claim. I would like to check on that to make sure that is the correct answer, that you can continue carrying it over until you've claimed everything. I would think definitely through the lifetime of the credit, of it being available. So right now it's for purchases made through 2023, but I will check on the answer to that question. How many years can you carry over the extra credit? What's the limit, if there is one? Another question, any water leak from a masonry chimney that could possibly leak water into the flue area chimney be covered, not just crown, but brick and mortar work? I would think any venting, anything surrounding the venting needed to properly and complete installation of the qualified product would be covered in the total. And Ryan, did that address the question you had about broader policy implications?
Yeah, that and just 25C, you didn't always know that it was going to be there or not. But with 25D,
Right.
we know of 3 years and conceivably a lot more.
Yes, definitely. 25D it's in place through December 31st, 2023. 25C, even in the beginning, I think the biggest, the longest term of time that was for certain up front was when it was first enacted, and it was for 2 years. So 25D definitely has more certainty for the next 3 years, and has the chance to be extended for another 5 years after that. So absolutely. All right, well, I don't think we have any more questions. So for the 3 questions that we received that we did not have a comfortable answer for, we will do the research to find those answers, and we'll include them in the follow-up email that we send out with the recording of the webinar. Thank you everyone for joining us today. Of course, if you have any other questions, please send me an email with anything, and there's no such thing as a stupid question or a bad question. I'm always happy to talk about the tax credit and talk through anything with you as well. So feel free to send me an email. Again, this webinar was recorded, and we'll send that out within 24 hours with those 3 questions and answers that could not be addressed today. So thank you everyone for joining us, and I hope to see everyone soon, either virtually or in person one day. Thank you.